The S&P 500 has surged roughly 9% in the last 3 months, reaching new highs. This as Goldman Sachs says the equity market is anticipating an acceleration in economic growth. Joining us now is Rachael Aiken, Vice President and Portfolio Manager at Rockland Trust. And Rachael, welcome to the show. What are the market indicators, do you think, that could point toward an acceleration in economic growth?
Well, thank you for having me, Alexis. I think definitely we've seen a market in rally mode, quite the contrary to where we were in October, where we continued to just kind of pedal in place and try to hit new highs. Much of that is really based on the firming of economic data points. We were operating where there was this overhang and fear of recession, ultimately signaled by the inversion of the yield curve. We saw that lift, and some layers of uncertainty have been removed. The Fed, corporate earnings were relatively strong based on what expectations were, and we have had progress in trade, although one step forward, two step back, a little bit as we've seen as of late. And that has created an environment that can focus more on the fundamentals. And with that data firming, we're seeing it across the board. We've seen the consumer, as far as consumer confidence and retail sales, rebounding a bit. We've seen manufacturing and non-manufacturing pivot off of bottoms. And we've also seen housing contribute positively to GDP for the first time in about 7 quarters. So those are all quite positive indicators for the economy to continue at trend as opposed to the stalling that we had anticipated back in the earlier part of the and late summer.
You know, Rachael, we've seen this rotation from defensive to cyclical sectors, both here in the U.S. and also in international markets. Is this a trend that you expect to continue?
So you're absolutely right. You know, the leaderboard has changed dramatically in the second half of the year from the first half, and you're seeing those bit more value-oriented areas that are also tending to be more cyclical at this point, like financials and industrials, really outpace the earlier winners of staples and utilities. Again, I think there's been a lot of value in looking at those companies relative to the run-ups that you've seen in the more defensive, sectors. So again, you can point to that reversal quite handily. And if you look at the top performers in the S&P year to date, you'll see some of the normal suspects, I would say, Apple, Microsoft, Amazon, but you also see JP Morgan, which is a financial one, you know, based on where financials have traded, based on their historical 5-year averages. It does tell you that cyclicals are taking hold with a better interest rate environment and cyclicals taking the lead. And again, it's carried over in the movement in the international markets as well. As for the last 3 months, it's been a bit of a stealth rally when you look at what's gone on with the DAX and the Japanese markets, posting even stronger than the 9% gains we've seen here in November.
You know, you mentioned the consumer a moment ago, and when you look at October retail sales, they were up, but mostly because of spending on things like gasoline, and folks really pulled back on spending on some big ticket items. Are you concerned at all that maybe the consumer is starting to lose a little bit of momentum? And if that were to happen, what's that going to mean for the economy in 2020?
Yeah, absolutely, Alexis. I think the consumer has really been the workhorse of the economy for the last several years. And when you look at many data points on the consumer, retail sales being one, consumer confidence being another, they're still at high levels, but they're not as lofty as they were 2, 3, even 4 months ago. So we really need to keenly take a look at what the consumer is doing and how they're spending. There are so many strengths when you look at the consumer, so I don't fear as if they're going off the cliff. You have job growth, wage growth, low inflation, low interest rates, high savings rates. You know, there's a myriad of positives behind the consumer, but they are getting a little fatigued. And you're right, when you look at what they're spending, especially in the October sales report, you're seeing that they're buying one thing at the expense of spending somewhere else. And it is healthy to look at where they are spending. And it's interesting to see that year over year, you're seeing double-digit gains in sales on the internet versus high single-digit declines in brick and mortar retail stores.
Yeah, we're certainly going to get
some
clues.
I
was going to say we're going to get some clues this week. We got Home Depot, Best Buy, Target out with earnings. What are you going to be looking for specifically in those reports, Rachael?
So really same-store sales growth and revenue. Again, looking at what stores and what the trends are as far as what the consumer's doing. It's no I guess I wouldn't be surprised to see those that are more internet focused or perhaps better retailers fare better. But really looking at what does the core basket look like, what is the consumer spending, and how are those same store sales holding up.
All right, Rachael Aiken of Rockland Trust, thanks so much for being with us.
Thank you, Alexis.
And coming up, why some new reading